Welcome to the Banyan Edge Podcast. Here's your host, Charles Sizemore.
Welcome to the Banyan Edge Podcast, America's #1 source for smarter, safer, more profitable investing, where we aim to bring you the very best ideas and the very best minds in the business, completely filter-free. I am your host, Charles Sizemore, and today we have a very special guest, Mr. Ronan McMahon, international real estate investor, an expert, and all-around international man of mystery. He is also the editor of the Real Estate Trend Alert, better known by its acronym, RETA. So we have quite the show planned for you. We're going to discuss this mega trend concept of the path of progress, something that Ronan believes will lead to excellent returns and already has led to excellent returns in overseas real estate. We're going to discuss how Americans can get financing in international properties. Obviously, stateside, it's very easy to go to any bank down the street and get a mortgage. Overseas, it can be a little bit more complex. So we're going to walk you through that. We're also going to discuss how to hold international real estate in an IRA if you are so inclined. And then finally, this is the good part. You're going to want to stick around for this. We are going to talk about a specific opportunity in the Switzerland of Latin America, Panama. Now, Panama is known as the Switzerland of Latin America, not just because of its banking privacy rules, of course, but it's actually an island of stability in what is often a volatile part of the world. And it's a place of natural beauty that is open for business. It's actually a very lovely place. So you will definitely want to stick around for that. Now, Ronan, welcome to the show. I will say you have found a kindred spirit. I have been a major fan of investing in international real estate for 20 years now, and I'm actually broadcasting this from, of all places, Lima, Peru. Where are you located at the moment?
A pleasure to be here, Charles. And I'm in sunny Cabo San Lucas in Mexico, just looking out at the azure Pacific and waves crashing on the beach. It's heavenly here this time of year.
I think you're making most of our viewers in North America extremely jealous because we have ice and snow coming our way over most of the U.S. right now. So that's fantastic to hear. So tell us a little bit about you. Like, how did you get into this? How did you start down this path of international real estate investing?
Yeah. So, I mean, I guess I, grew up and went through the school and university system in Ireland, left university and, went straight into working a corporate job like pretty much everyone else who got a finance degree, like I went and did. But as soon as I started making a proper paycheck, I started buying rental property. So, I kind of grew up in a household where from a very early age, my parents had built a modest portfolio of rental properties. I saw the kind of the ease with which wealth can be created over time, simply by buying a piece of real estate and having your tenants pay the mortgage for you. So I guess it was somewhat in my blood. So as soon as I started making a paycheck, I kind of got lucky. My parents took me by the hand and kind of said, I was up in Dublin enjoying the good life. Cork was my hometown. They kind of said, we're buying a unit in this building. Maybe you should too. And it was pretty much as easy as just having to sign on the dotted line. So I kept working the corporate life and buying rental properties as I went. And then a couple of things happened. First of all, I looked at the job satisfaction I was getting. I looked at my paycheck. I looked at what the Irish IRS took from that. And then on the other side, I looked at my real estate gains. I was looking at the capital appreciation I was generating, the rental income I was seeing, and there was just no comparison between how much I was making from this complete side hustle that was like taking almost none of my time. But then the big kind of epiphany moment came around around kind of 2004, 2005 in Ireland. And we had seen just this incredible run up of real estate values. Prices had kind of trebled in the previous 7 or 8 years. And a real estate broker came knocking and made an offer on a home that I just thought was out of whack. This is just more money than this home was worth. So, that was the moment that I said, I need to take some action to to keep this trajectory going in the direction it is, because this home, I believed wasn't worth this amount of money. So then at that point, two things happened all around the same time. I got tired of the corporate life and I started looking around for other opportunities. I came across a company called International Living, which produces magazines and research for Americans interested in living, retiring, or investing overseas. They're based in a city called Waterford in the southeast of Ireland. I knocked on their door. They said, well, why don't you marry your personal interests of real estate and our beat of finding exceptional international opportunities, and why don't you go travel the world and find, I guess, the same sets of circumstances as we had seen in Ireland in the previous years? Why don't you go look for them overseas? And that was 20 years ago. And within 10 days of that conversation, I was on a plane to Panama and Nicaragua. And I pretty much haven't stopped since.
You mentioned Nicaragua. One of the best investments I ever made was I was actually right out of college and didn't have two pennies to rub together, but somehow I saw this opportunity in Nicaragua, and I got some friends and family together, and we actually went in and bought a lot. We ended up selling it a couple of years later, made a good profit on it, roughly doubled our money. I wish if I could go back and change one thing in my life, I would have just never sold that piece of property. If I had just held on to that, probably would have been a 10 bagger by now. I would have very likely made 10 times my money. So I sold too early. At any rate, so right now, of course, this is a kind of a weird time to be, it's a weird time in the economy and in the stock market, et cetera. But that a lot of what's making this a complicated time in the capital markets actually makes this a very interesting time, particularly for a U.S. investor to look overseas. And one of the issues is, of course, inflation. Inflation has been an absolute, we're not used to this. We haven't really had inflation in 40 years. All of a sudden, inflation is a major problem. Well, real estate is, of course, a natural inflation hedge. I think that's fantastic. And you've had some experience with that too, I'm sure. You've seen inflation all around the world, and real estate keeps up with it.
Yeah. So, I mean, there's a number of kind of components to this. First of all, at its most basic level, we all need shelter. So, I mean, we're going to be very, inelastic in our response to kind of rising housing costs. We need somewhere to live. So the kind of the core thesis, it's not easy to substitute your house for a lower quality house. There's a lot of transactions costs. There's a lot of friction. It's a lot easier to, substitute a cheaper cut of meat for your fillet steak. So that's at the base idea. But what we see in today's real estate markets is so much more than just that happening. So my primary focus is places where we're buying vibrant markets, where there's a lot of development, where there's a lot of demand at the kind of early to mid stages of development. So these are places that are growing fast.
And so, this is what you refer to as your path of progress.
Exactly. We are buying ahead of a surge of demand. So demand is coming to a place, and real estate supply needs to react to keep up with that. But in today's environment, we have the inflationary impact. Your steel and your furniture and your light sockets, all that stuff is costing more. But also you have the thing that some things just aren't available, or some things are very difficult to get, or there are delays. So there's the cost component. There's the interruption component, that many construction projects are getting stalled because they just can't get components that need to be put into that.
It's that supply chain mess we've been hearing about for 2 years now. Yeah.
It's everywhere. Then we've got the labor component. And again, labor markets are extremely tight everywhere. You know, even here in Cabo San Lucas, just 2 days ago, I went down to one of my favorite restaurants for lunch and I said, can I have a table? And they said, I'm sorry, we've no staff. Literally, they had to close off half the restaurant because they just couldn't get staff. So these labor shortages are in play everywhere.
That's insane.
Then we also have bureaucratic bottlenecks, because you look at a real estate project needs environmental permits, it needs construction licenses, it needs all these things that come out of, you know, complex bureaucracies in, you know, countries that aren't that efficient at baseline. So again, for example, here in Mexico, a real estate project needs a piece of paper called EMIA. It's an environmental permit. These come out of Mexico City and it's a black hole at the moment. So we've got rising costs, and then we've got all these like scarcity issues. Then on top of everything, capital and bank finance is also an integral component about creating a real estate project. So typically a developer will get bridge finance to cover construction costs over a period of time. And of course, interest rates have gone through the roof as well. So what we're seeing is a real acute supply interruption at a time when demand is surging. And that's creating just a phenomenal opportunity to generate rental income, to generate capital appreciation, and to just lock in something of kind of multi-decade value. So all this disturbance is creating very, very significant opportunity in my beat.
Yeah, and I would throw one more on the list as well. You know, the US dollar was in a bull market from 2008 until really, you know, the second half of last year. That's a very long time for the dollar to be in a bull market. Well, it seems like over the last several months that has started to reverse, which is normal. You know, the dollar goes through long periods where it rises, goes through long periods where it tends to fall. So having investments outside of the US gives you a really nice dollar hedge. Well, apart from everything else, apart from everything you just said, this extra icing on the cake is you're also oftentimes doing this outside of our currency. So that's another nice aspect. Now,
plus, sorry to cut you there, Charles. There can be really kind of interesting kind of takes on that as well. Like, for example, you can go to Medellin, Colombia, and you can buy with your exceptionally strong dollars right now. So, you know, the dollar has strengthened in a pretty phenomenal way against the Colombian peso. And then when it comes time to renting your property, you can choose two markets. You can rent to, let's call it the expat or the digital nomad market, and you can denominate that in dollars, or you can rent to a more local market. You can kind of cherry pick how to take your income, whether that's in local currency or dollars. And very interestingly, that, you know, in terms of pricing perceptions for the different markets, there can be an arbitrage opportunity, because the same rental, you know, priced in dollars to that dollar market can be priced at a different level to the local currency. So you get to kind of cherry pick in certain instances.
No, you're right. I've seen that in Peru as well. That's that trade is very much alive and well, and that's a good one to take note of. Now, speaking of financing, another point you made was, you know, your group can help investors get into these deals. And one of the biggest issues, well, let's just back up for a minute. So the typical investor does not just throw cash down to buy a property. Property's expensive. And one of the benefits, one of the greatest aspects of property investment is you're able to leverage it. You can generally borrow most of the value of the property, not have to tie up that much of your own equity. That's very easy to do stateside. You know, the mortgage process here is very standardized. Overseas, that can be a little bit intimidating to someone who's never done it before. So walk us through that.
Yeah, so I guess in terms of that, things can fall into two buckets. You have places like Portugal, for example, where Americans can easily go and rent at a 80% loan to value and still can get, really, really low rates. So even today, rates kind of sub 4%. And, you go back a few short months, we were able to borrow at rates as low as, 0.8 and 0.9%, and even fix at 1.9%. So as recently as 9 months ago, you could have fixed for 20 years in Portugal at 1.9%. You go around Europe and, maybe France is a bit more complicated, maybe 70% loan to value, a bit more paperwork. Spain is pretty easy, like Portugal, but again, more like 70% loan to value. You go to Italy and it's maybe 60% and more bureaucracy. So it's generally doable in the developed world. You go to maybe somewhere like Panama or Costa Rica or here in Cabo San Lucas, and mortgage finance generally isn't available. Now it is becoming available recently. There's a number of kind of startups trying to tap into this market. I think they really haven't quite got it figured out yet. The bureaucracy is cumbersome and the costs are high. But within my group, within my RETA group, we do make a condition of nearly all of our members-only deals that the developer offers finance. So that way we typically get to pay off a condo that we buy pre-construction, typically over about an 8-year period. So it makes it doable in markets where mortgage finance really isn't available, in practical purposes.
Oh, good night. I can share my own horror stories about that. I've tinkered here in Peru a few times, bought a few small properties, but I ended up just throwing up my hands in despair after trying to get a mortgage. It was impossible as a gringo here. I just flat out couldn't do it. So getting access to financing is a big deal. It makes these deals doable, whereas they might just flat out not be doable otherwise. So that's huge.
Absolutely. And of course, even if it is doable, as real estate investors, we want that benefit of leverage. We want the impact that leverage can have on our returns.
That magnified return, and the fact that your tenant is essentially buying the house for you, paying off the note for you. So that's a very, very nice aspect indeed.
Absolutely. In parts of Europe where banks take foreclosures, they'll do 100% mortgages. So, for example, literally just 2 days ago, I sold a condo in Portugal that I bought just 9 months ago with 100% mortgage. It was a bank.
No money down at all.
No money down, just closing costs. And I got it for 410,000 euros, just sold it last week for 565,000 euros. No money down, had tenants in there, net positive cash flow, and only into it for closing costs. So that's a way, if you're on the ground and you're kind of connected to a market, you can do exceptionally well, even with kind of limited amounts of capital.
Yeah, no, when you're getting it for closing costs, that's not bad. Now, a lot of U.S. investors have most of their net worth, or at least most of their investable capital, tied up in retirement plans like 401ks, IRAs. Do you have investors coming to you with retirement funds? And as a general rule, are the deals you look at, are they able to accommodate that?
Yeah. So, RETA members buy real estate through all sorts of vehicles, through their own personal name, through an LLC, and also through their self-directed retirement account. So it really depends on their personal situation, but there's a high degree of flexibility in terms of how they can do it, purely down to their personal situation.
That's good to know. One little point I would put out there is, if you, the viewer out there, are considering buying real estate in a retirement account, just make sure that it is for investment purposes. The IRS is completely fine with you buying an investment property within an IRA. They do get a little bit funny if it's a property for personal use. You could get yourself into, kind of some tax. You can get yourself into a tax mess. So just make sure that whatever you're buying is for investment purposes. Now, okay, let's get to the good part. So I love Panama. It was one of the first foreign countries I ever visited. Actually, it's a lovely place. It's very close to the U.S. They actually use the U.S. dollar, which means you have no currency risk operating there. It's a very business-friendly part of the world, and within Latin America, like I mentioned before, it really is just an island of stability in an area of the world that can be pretty chaotic. Panama is very, very stable, and you have a new project there.
Yeah, absolutely. So as you mentioned, Panama is one of these places that pretty much no matter what's going on in the world, it's a good moment for Panama, because in any type of moment of instability, people and capital flood to Panama. As I mentioned, Panama was one of the first places I visited 20 years ago when I embarked on this professional journey. It was also the first place I internationally invested as well. And over those 20 years, I've seen Panama go through these various stages of growth. And, at each point, Panama opens itself and caters to a new market, whether that's geographical, whether it's corporate type. It just attracts mobile folks and mobile businesses from right across the world. So even in kind of 2008, 2009, when the North American real estate market was crashing, and when their North American buyers, many of whom were retirees who were relocating to Panama, when they found themselves in difficulty, that market was just replaced by Colombians and Venezuelans, because this was a crisis moment in Colombia and Venezuela, and people were fleeing with their families, with their money, with their businesses. As you mentioned, this is a region with, uncertainties, political uncertainties, security uncertainties, and all the major international corporations that are active in the region, they need a place for a multinational base for their regional HQs. They're flooding to Panama in greater and greater numbers, because Panama is safe, it's stable, it operates, its business essentially is to be a platform for international trade, international commerce, and it's their thing. It's pretty much their only thing, which is to be a global, welcoming, city and country. So to that end, over the rates of economic growth over the last kind of 2 decades have just been astonishing. We've just seen Panama really kind of catch up and grow into that kind of upper levels of middle income countries, and it's a place where where just almost every other kind of piece of dirt is being turned into a glimmering shiny high rise or a corporate HQ. So within the context of all of this, I see 2 big opportunities in Panama. One is to buy at the higher end of residential real estate. So you can buy a high-end condo in Panama City from, say, $350 per square foot. You go to any other regional hub city and you're going to be paying, at least 3 times that level. So we have low prices, we have surging demand. And then we also have the third thing, which is the scarcity of developable land in Panama City. So Panama City 2 decades ago, when I first visited it, all these green fields, all the scope for development, that's all now maxed out. So that's opportunity one. Opportunity two, which I'm presenting in a very actionable way to RETA members in the next few weeks, is to buy true beachfront that's within an hour to 90 minutes of that glimmering high rise, to buy a beachfront condo where you literally can walk out your door just past the glistening pool and you're on the beach, but you're only 60 to 90 minutes drive from those corporate HQs, the glimmering high rise, all that stuff.
The airport.
Now, the airport, of course, which is the best connectivity in Latin America. And the thing about this beach play, it's very interesting on a couple of fronts. First of all, this is an area of Panama where development just leapfrogged past it, because you've got the main Pan American highway that runs along the Pacific. It went down the coast to communities like Coronado, but it missed the turnoff to this area of Chame. Now, it missed the turnoff because there was no road, electricity, water. There was no infrastructure down there. And down in this little curve of land, all you had was, homes of some of Panama's most wealthy and elite, and they liked roads with huge potholes, and they liked the fact that there was no infrastructure for the riffraff, because that kept it private for them. So development moved along the coast. It missed out this section of beach, which is the closest super nice beach to Panama City. And that's all changed over the last couple of years, because one of Panama's strongest developers built the infrastructure, connected up the beach with the main coastal highway, and is creating, a truly special beachfront community where you can work out in the gym in the morning, take a surf lesson, where you can work in the co-working spaces, where you'll be able to eat sushi from the rooftop of a snazzy hotel, a true beachfront community. And there, in the next couple of weeks, RETA members are going to be able to buy condos from the low 200s, from about 228,000 euro, which, for true beachfront, and I'm talking, right on the beach, all that's between you and the beach is a pool and some of your garden areas. It's truly exceptional deal.
If you don't make it to the beach, it's only because you got distracted by the beautiful pool.
Exactly.
Now, you made one point that I would go back to, and you said this area was inaccessible until recently, until one of Panama's biggest developers decided to make it a priority. That really, in developing countries, it's very important to have good partners. You need good financially strong partners, because with things, most projects, there's bumps in the road. You have to have somebody with experience and capital staying power to see projects through to completion. So that's a big deal.
Big, huge, big time. And, it's very easy for a foreigner or an American to kind of slip into this thing that they go to a country like this and they meet another American and they have a perception that, the person from my home country or state is going to be more competent or a better developer. In my experience, that's not the case at all.
No.
The developers that we work with, typically they're multi-generational, and they live off their reputation, because this is the thing. When you get into many of these markets, the court system is really, really weak. So how businesses effectively work and how businesses effectively team up with each other and partner is from a very high level of trust rather than the word of a contract. So for the businesses and developers in this part of the world, trust is more important than what's in the contract. And generally, we work with developers who've been through multiple generations and multiple crises. So, typically it's multi-generational. So in the case of this group in Panama, it's a group called Grupo Los Pueblos. They're the group behind the Islands project in Panama City. So if you look online, you'll be able to see that a developer has created these almost Dubai-style islands in the Bay of Panama, and that's their project. And also, interestingly, it's a project that they took over from a failed international group that tried to do it 20 years ago or so. So this is a real estate and business family that's been in this world for multiple generations. They're committed to the long term. Personally, I've been working with them now for 17 years, and their track record is stellar. But that's just the type of formula of developer and partner you need to look for.
Yeah, exactly. That's exactly the kind of person you want to work with. Their reputation, their entire life is built around this image, and they will do everything they can to preserve that, which means preserving you.
And gringos come and go.
Gringos come and goes. Gringos come and go. The list of gringos that tried to go build something in Latin America on their own is a long one. The number of successful ones is a rather shorter one. Yeah. So stick with the local market. Stick with the professionals that actually know what they're doing.
Yeah, absolutely.
So tell us a bit more, where can our viewers read more about Rita? Where can they read more about you? Like, where can they go for more information?
Absolutely. So your readers who are Total Wealth Fellowship members, they're already part of my Rita group. So I guess that's another reason to join your Total Wealth Fellowship. And for those that aren't, we'll include a link in the email with this that will, show them where they can go to get more information and also take a trial membership of my service. And I think we'll also send my most recent book out to everybody who clicks on that link and signs up as well.
Yeah, very good. So we will include the link below. This is something that you should absolutely look at here. International real estate is a fantastic asset class. It offers real diversification. It offers protection from inflation, dollar depreciation, you name it. And beyond all that, it's just fun. Who doesn't want to own a beautiful beachfront property in an exotic country? So Ronan, thanks for joining us, and we hope to see you again soon.
Absolute pleasure. Thanks for your time, and see you soon.
Thank you.